The present bond market shakeup and surging interest rates could put the U.S. economy at risk. The United States is now paying over $1 trillion a year just to service its federal debt, an eye-popping figure that's unsettling global markets and weighing heavily on the national budget. With interest rates climbing and fears of default mounting, investor trust in U.S. bonds is starting to falter, leading to credit rating downgrades and market turbulence. In times like these, turning to tangible assets like physical gold can help protect your wealth from volatility and fiscal fallout. The government's annual interest bill is now larger than its defense spending and even exceeds the combined costs of Medicaid, disability benefits, and food assistance. This isn't just a budgeting concern. It's a flashing red light for anyone watching America's long-term financial stability. As the U.S. digs deeper into debt, questions are growing louder. How long can this last? And what happens when the system buckles? Each time Washington runs a deficit, it turns to the bond market to make up the difference. But with rising concerns about the U.S. government ability to repay its obligations, investors demand higher returns. That increases interest costs, which then compound into even more debt. It's a cycle that threatens to spiral out of control, and some economists are warning that the U.S. may soon face a full-fledged financial crisis unless drastic changes are made. The clock is ticking, says Ray Dalio. Legendary investor Ray Dalio has issued a stark warning. The U.S. has just a few years to act before suffering what he calls an economic heart attack. He believes we're nearing a debt death spiral, where the only way to stay afloat is by borrowing even more at higher and higher rates. Dalio warns, the unimaginable becomes real suddenly, paraphrasing the famous Ernest Hemingway quote. How did you go bankrupt? 2 ways. Gradually, then suddenly. History has proven Dalio right before, so it's worth weighing his warning seriously. Are Treasuries still safe? Historically seen as the safest investment in the world, U.S. Treasury bonds are now facing skepticism. Ben Harris from the Brookings Institution warns that even a slight rise in perceived risk, say from 0% to 0.2%, can shake the markets, since trillions of dollars ride on the assumption of U.S. creditworthiness. The signs of trouble are already here. Interest rates on long-term treasuries have jumped, and investors are increasingly shifting their funds to overseas markets in Europe and Asia. The U.S. has already been downgraded by all 3 major credit agencies. In 2023, Fitch pulled the country's AAA rating and Moody's followed suit. These downgrades increase borrowing costs and could tip the country into a deeper fiscal spiral. What happens when the bond market says no? Even powerful governments must listen to the bond market. As borrowing costs rise, markets, not politicians, start calling the shots. Proposals like President Trump's One Big Beautiful Bill may be derailed not by political opposition, but by bond market resistance. Just look at the UK. When their government ignored bond market warnings, it triggered a financial firestorm that ousted top leaders and forced a policy reversal. How does this hit home for Americans? Rising federal interest costs don't just strain Washington. They squeeze your budget too, from mortgages and credit cards to car loans and business financing. Higher rates make everyday life more expensive and limit economic growth. The Committee for Responsible Federal Budget estimates that if Treasury yields stay elevated, it could add $1.8 trillion in interest expenses alone. J.P. Morgan's Jamie Dimon has warned that a sudden spike could crack the bond market with widespread consequences. So what happens next? While no one knows the exact moment a crisis might hit, many agree it's coming. Former IMF economist Kenneth Rogoff reminds us that financial collapses rarely wait for the math to add up. They happen when confidence disappears. Treasury Secretary Scott Bessent has floated the idea of inflating the debt away. But that, too, comes with risk, runaway inflation, a weakened dollar, and a loss of global financial leadership. So, how do we protect our financial future outside the normal conventional equities and bond investments that have proven volatile as of late? As America's fiscal future grows uncertain, many are turning to physical gold as a more secure, time-tested hedge. Gold isn't just an inflation shield. It's protection against rising debt, market instability, and policy failures. It is important to choose a trusted gold investment company that actively monitors economic trends and policies that can directly affect the gold price. Professional gold investment companies can help target buying entry points as well. In addition to investment timing, a gold IRA company, more specifically, can provide a means of owning physical gold without the need or possible liability of storing the metals in your own home, as well as yielding potential tax benefits and competitive prices. Finding the right gold IRA company for your individual needs is critical. For example, if you require a low investment minimum to start a gold IRA, Birch Gold Group or American Hartford Gold would be 2 choices to consider. However, if you are a serious high net worth investor who can afford a higher minimum to take advantage of the most competitive gold prices and lifetime customer support, then Augusta Precious Metals would be a good fit. For a highly personalized experience, National Gold Group is a family-owned gold IRA company that offers a low minimum investment, no-fee buyback policy, and great educational resources for their clients. Furthermore, Noble Gold Investments provides gold IRA as well as private investment options for home storage. See the links in the video description to access the free gold IRA guide from the Gold IRA company that best serves your needs. 5,000 years of history has continuously demonstrated when confidence in the system fades, gold remains solid. If you have $100K in retirement savings to protect and are looking to take advantage of the most competitive gold prices, see the link in the video description to attend a free gold investment educational webinar hosted by Augusta Precious Metals. Secure your place today. Thanks for watching.